Welcome to another week in review. We're going to be looking at the trading week of June 16th, 2025. Apologies off the bat here. I've been sick the last few days. My throat is pretty destroyed. My voice is kind of gone. So if I'm creaking and cracking in this video, I apologize. I'm sure I probably will at some point. So I'm going to try and keep this relatively brief. This is a tricky week to navigate from a data perspective and from a role perspective. So it is contract roll week. So the June contract expires on Friday. The way that I roll my charts is I transition over when session volume at settlement is greater. So that'll be Tuesday. So Monday I'll be trading M contract. Tuesday I'll roll everything over to the September contract, very likely, on all my futures charts. And for simplicity, I find trading M contract the Monday after the Friday is just easier for me as well. A lot of the time it gives me a solid point of reference looking at last week's action, and then using the Monday contract, or pardon me, the current contract, expiring contract on the Monday following to just kind of keep myself in check, I guess, for the first day of the week, and then kind of bridge everything over to the second contract on Tuesday. So with that being said, we'll go quickly through the data here. So Monday, we don't have much. We have the Empire State Manufacturing Index at 8:30. We also have the BOJ rate decision at some point on Monday. I don't think the market will really care too much about that, to be honest, with everything else going on. Tuesday, we have 8:30 a.m. We have retail sales. Not much else really to pay attention to on Tuesday. Wednesday is the big one. We have jobless claims at 8:30 a.m. 2 p.m. we have the rate decision, and then 2:30 p.m. we have the FOMC press conference. Thursday is closed. The U.S. market is closed, so futures market will be open until 1 p.m. With Euro close, but the U.S. equity market is closed, so the volume will be non-existent really on Thursday for futures. You can still trade it. I might. I'll be around, so I might trade it if there's anything that makes sense to me, but the volume will be quite a bit less. And then Friday, there's no major data to pay attention to on Friday, in my opinion, but we do have obviously quarterly OPEX, and we have roll as well. So big things this week to keep in mind. Thursday is a holiday, so we have that weird day off in the middle of the week. Short week, we have roll week, we have quarterly OPEX, we have expiration, and then we have the FOMC rate decision this week, just to kind of throw a wrench into everything if we weren't already frustrated enough with all the headlines coming out, with the Middle East conflicts, and obviously oil is ripping as well. So there's a lot going on. It's been fairly difficult conditions especially for new traders, I would say. And I'll talk a little bit about that. I'll start right off with what happened on Friday. So I don't want to harp too much on what happened last week. The big things to note, and what I was talking about the week prior in the week prior's video, was the move the following Friday, or the prior Friday, that we had breaking out of this 3-week balance range that we have marked right here at 59.87. So you can call it 59.90 for simplicity. We held outside of that on Monday, and we were able to actually have this very laggard drive higher with relatively equal lows on the daily time frame, indicative of continued laggard buying all the way back up into the highs. The high that we set on Wednesday was actually significant, so I was looking for 6070s to 6100s last week to print. 6070s is the bottom set of single prints from February 23rd. That's the day that we broke down into the low and started the multi-thousand point sell. Until we had the news Thursday night of the conflict in Israel, I actually thought that there was a better chance we'd still see 6100 last week, and then obviously things changed pretty rapidly with Thursday's price action, and then the overnight sell Thursday with everything that happened. So that was off the table pretty quickly. But Thursday was an interesting session, and Friday was an interesting session as well. And I think a lot of people on Friday probably had some difficulty with this, because obviously with the headlines coming out, and with the situation in the Middle East being as impactful as it is from a global stage, a lot of people would have assumed that we're just going to sell straight down, and very often that's not the case. And I think the thing to consider, especially if we're looking at what happened with the tariff news, etc., and those liquidations that we had versus what we had happen with Israel, is that the market has been hedged fairly well for a while. And what happened with the tariff news is that it really wasn't properly hedged at the time. You can see that in the options data. You can see that in the COTs as well. Like it was a different situation. The market didn't expect that to happen. They didn't expect those numbers to be as egregious as they were, which have obviously since been walked back. But we were not trading in a range and in a position where that news that came out was, properly positioned for, versus, this conflict has been brewing for quite some time. There's been adequate time to hedge. We've seen VX and VIX futures. We've seen a lot of markets shift towards the possibility of that happening and potentially the inevitability of that happening. And when we had this drop, it wasn't as intense as probably a lot of people thought it should have been. Purely from a market profile perspective as well, when we have huge liquidations overnight like this, especially in a market that's sitting in a range that has been well hedged, oftentimes we have that counter auction, that move back to test previous day's value to see if there's any interest higher. So usually when I see these huge liquidations, I'm generally interested to see continuation, especially if there's reason to see continuation, with continued headlines, pressure from CL. But the big thing I try and wait for is getting into major ranges of where I would expect, selling to continue. So we had this huge liquidation move on Friday, and then we had a counter auction back up, basically correcting most of the overnight range, squeezing out all these shorts, or at least, having them cover back up basically into cost basis. And then where we stopped and where we set a high of day was significant. So this was prior weekly high. This was value area low of the previous day. This was also the B period single prints that broke us away on that day. So Thursday we had a really nice A period excess. We had B period single prints that continued to break us away. And obviously it got very messy into the high and we consolidated for the remainder of the day. But where we stopped was right where we broke away. So right where we had that really nice drive on Thursday where we broke away, we have a huge amount of confluence in these areas about why it would make sense to stop here and why it would make sense to potentially reverse here. So the value area low, the weekly POC wasn't there at the time. It shifted down into 22s, but we have these B period single prints here, prior day value, which you can look at this simply as a rejection of the prior day value. And then obviously we had the liquidation into the weekend. The other thing to consider here, and I think a lot of people maybe didn't think of it this way, I know I was talking to a few traders and they didn't think of it this way, is that when we set this high of day, take the order flow out of it. The order flow was also very indicative that this was going to be high of day. Take this out of it. Also consider where we're currently trading and the likelihood of, positioning long into the weekend with so many headlines coming up. So how many people are actually going to how many people will want to sit balls long into the weekend with, potential escalations and more in the Middle East, potential price spikes in CL, all those things, right? Like the likelihood of closing up into this range was very limited. Order flow aside, just from a purely speculative basis, it was very unlikely we were going to close into the highs of the day, and more likely we were going to trade back at least into mean reversion, or at least close closer to the lows. And obviously we did. We had settlement down into 79s, basically into the lows of day. So things to consider. Going into this week, the big thing for me, and we're already 8 minutes into this, so I'm going to try and keep this brief here, but the big things for me are whether or not we're accepting inside or outside that prior balance range on Monday, and if we do have any type of drive higher, what the reaction is 6,004 to 6,012, so basically up into this range right here. You could even call it up into Friday's value area high. So for me, the plan this week is, this can change very quickly based on headlines, but Monday, the first thing I'm going to note here is if we're unable to bid above 59.90s, this market is going to remain weak and it's going to seek a bid quite a bit lower. So if we're looking at 59.90s, we're looking at prior balance, that prior balance range. If we're failing below it, immediately I'm going to be looking for obviously the RTH low at 65s, but more so I'm going to be looking to back test 59.50s, which is the yearly OR, as well as the 20-day simple moving average. I'm going to be looking down to 59.30s. In my opinion, if 59.30s don't bid, and I'm not sure if they actually will if we get back down into this range, but if 59.30s don't bid, then I think the likelihood of traversing down into the bottom of the 2 weeks prior range, down into 58.60 to 70 area is probably quite likely. So we do have a naked POC at 59.05s, which should be a target on the downside below 59.30s. Then I'd be looking at the old weekly open at 58.90s, but more likely down into these lows and down into this RTH gap at 58.60s to 58.50s, somewhere down in here. And then note we have the 200-day moving average down into 58.40s as well. Basically, below 59.30s, I really don't think there's going to be a real bid until we get down into at least 58.40s. There's probably going to be some counter moves. There's going to be some moves back up and down, but as far as what we'd be doing there, we'd be shifting the daily. We're in 5-day balance right now on a shorter term basis, and we're still one-time framing up on the weekly and the monthly. But I think as far as, where we're going to see weakness in this current auction and a corrective period would be inability to stay above 59.90s and heavy selling up into 6,004s to 12s area that ultimately takes us back down below 59.90s. Where I'd be looking to be on the long side. So if we have headlines or whatever it is, if the market starts to completely negate what just happened on Thursday and Friday, I'd be long above 60.20s. That's really the only way I'd look long on this market right now. That or much lower. So if we do end up seeing 58.40s at some point this week or next, and we see a decent bid start to form down here, then potentially I could look for a long trade down there. But as far as currently, I think it makes more sense to me that we potentially started a correctionary period, especially having settlement below prior weekly balance right here. So that's how I'm going to look at ES. NASDAQ is going to be very similar. I think as far as the primary pivot I'm going to be using will be this 720 to 750 area. Up in here, the NASDAQ has been notably weaker, and again, it makes sense, especially with pressure from CL and commodities starting to come in. NASDAQ is generally going to be more affected in those situations. So, again, if we're unable to rebid this 21,750 range, if we can't accept back above here, then again, I'm going to be looking to stay on the short side and ultimately look for the RTH weekly lows down into 600s, but more likely down into this 550s range, which is a massive pivot on the NASDAQ on higher time frames, down into the ETH weekly low 470s. I think if we're down into 550s again, similar to ES, I don't think this is going to bid the same way it has in the past. I think with the amount of inventory that we have sitting above this and with the weakness that we saw on tape on Thursday, Friday last week, I think if we're back down into 550s again, I think it's more likely, in my opinion, that we're going to have to basically backfill some of this breakaway up that we had and probably get back down into the 21,300 to 21,250 range to find any appreciable bid. And again, there's going to be two-way tape. There's going to be long trades potentially up and down on this side. But as far as larger market moves, I think anything below at this point, below the 750 range, is potentially going to be the catalyst to get us lower and start more of a corrective move on higher time frames in the interim period. So that's how I'm going to look at that. If we jumping back a little bit to ES as well, so this is the 8-hour chart. So this is the level I was talking about forever, the 59.80s, 59.87 to 90 area. You can see we closed back inside this prior balance. So again, that's why I kind of lean more towards potentially some correction activity right now. So that's this level right here on the 30-minute chart. And I think as far as, where this goes from here, just watch 59.50 and then up into basically 59.50 to 6,012, this range up here. If we can't accept up in this range, when I say accept, I mean we can't spend time and build volume back above this range, then the likelihood, in my opinion, is more corrective activity down and potentially down into 58.40s. So this is going to be a very challenging week again as far as data goes, as far as releases go. Headlines are going to come out of nowhere this week as well, I imagine. So this is not a week, in my opinion, to really be looking at large size positions and really over trading. That can really be a killer in weeks like this. I'm going to be taking very limited trades. There might be days this week I might not trade at all, especially with the roll. So we'll have to see how it pans out. But I think as far as where to look, I think it's pretty clear as far as understanding where this auction separates. It's going to be right in this range right here. So if we build time and acceptance back above, then I would be looking on the long side, especially if we get above 6,020s. That's where I'd want to stay on the long side again. And if we can't accept back above, then I'm looking for the correction down. And I'll keep it as simple as that. So hopefully that helps. If it does, please like the video, please comment, please subscribe. I appreciate your time. Thank you very much.